All right, we will start this morning with an introduction and discussion of the INCOIL Strengthen Homes Program Model Act. You can view the model in your binders. It's on page 206 and on the website and the app. Before we go any further, I'll turn things over to Representative Dunnington of Utah.
Thank you, Mr. Chairman. I'm looking forward to our discussion today as we continue to work on this Model Act. Let me provide a little bit of background and just kind of summarize what's led us to this point. I started last year by introducing a model that was essentially only Section 4 of the model before you today. It required insurers to provide an actuarially justified premium discounts to insureds that retrofit their homes and bring them up to certain standards. As I've looked into it, the actuarial justified concept still needs some more work. It's got some challenges. And also, upon further consideration, I wasn't convinced that such a policy would really move the needle by itself. So I withdrew that proposal. But I'm still very interested in a policy that overall incentivizes people to take steps to strengthen their residences from natural disasters. As you know, natural disasters are a big area from east to west coast, and that's why I'm working on this. So that brings us to the model before you today. It still contains the language regarding the premium discounts, but as I said, that needs more discussion. But on the front end, it establishes a Strengthen Homes program within the Department of Insurance that provides grants to people to retrofit their roofs to certain standards. I think the grant program is critical to make the policy worth considering. As some of you may know, this concept is actually proving to be very popular as it has recently either been enacted or introduced in several states. And in fact, I know the sponsor of those bills and laws may even be here today. So now's a good time for INCOIL to be involved in this area of insurance policy. It's a chance for the organization to provide guidance and leadership to other states. I look forward to hearing everybody's feedback on this model, and I'm certainly open to suggestions on how it can be improved. This is a first draft, and hopefully we can make progress for our November meeting. This is a little aside. A month or so ago, I attended the National Association of Insurance Commissioners meeting in Phoenix, and this is on their radar, and they're doing some analysis and study to see the availability of insurance to cover these natural disasters where there's hurricane, hail, fire, and so they're going to do some good work on this as well. Thank you, Mr. Chairman.
Thank you, Representative Dunnigan. I apologize. We will now hear from our panel, and we'll start with Brian Powell of the NAIC Center for Insurance Policy and Research, and actually the former director of the Alabama Strengthen Homes Program, which I understand was the first state in the nation to do that. My insurance commissioner says what we like to participate in is R&D, rob and duplicate. So the state of Oklahoma is now running the same legislation. Very, very glad to have you here. Can we see if the other?
There you go.
It is.
Here, this one's working. I think that's working. Is that better? Oh, yeah. That's great. Hey. Okay, thank you. Well, thank you for the invitation to speak for a few minutes today. Just a little more of on the introduction here. I recently retired from the Alabama Department of Insurance. Actually, I retired on May 1st and started working for the NAIC. I'm sorry, March 1st, and started working for the NAIC on March 4th. So that 2 days I had off was an amazing retirement. I can't tell you. So while at the department, I worked in various roles, more notably the deputy receiver for the state of Alabama for a while. And then I moved to the director of the Office of Risk and Resilience, and then retiring as a deputy insurance commissioner. Also during my time there, I developed the Strengthen Alabama Homes program and was the founding director and oversaw the program until my retirement. So I oversaw the program for about 10 years in operation, but during the development from the legislative piece forward was about 13 years. As you remember, the SAH program, which is Strengthen Alabama Homes Program, is a grant program that offers grants in the amount of up to $10,000 to Alabama homeowners to retrofit their homes to the IBHS fortified standard for hurricane and high wind and hail. I believe Mr. Tom Travis from Louisiana, and he's also working with the Strengthen Louisiana Homes Program, spoke to this committee last year on that program, and just to note that Louisiana program is basically a carbon copy of the Strengthen Alabama Homes Program. To date, Alabama's program has issued approximately 7,000 grants to Alabama homeowners, but what it's really done is it's really worked to create a culture of resiliency. And working with partners like the Robert Wood Johnson Foundation, where we utilized a $250,000 grant, that foundation was kind enough to grant the Strengthen Alabama Homes Program. We've been able to perform some pretty outstanding work on outreach and education, especially through the most economically challenged parts of the state, educating homeowners on the benefits of insurance and basically creating a resilient home. The Strengthen Alabama Homes also partnered with nonprofit organizations such as Habitat for Humanity to bring additional resources to the table, and also partnering with the insurance industry to meet some of their strategic goals in some of their community reimbursement programs. Excuse me. Recently, we partnered with Protective Life Insurance Company out of Birmingham and mitigated homes in the downtown area. And these were the most economically challenged areas of Birmingham. And what we've seen is a very successful initiative that has mitigated homes, and now those homes are insurable. And what's more is that the insurance is affordable to those homeowners. To demonstrate the culture of resilience that's grown in Alabama, of the 62,000 fortified homes in the United States, 58,000 of those are in Alabama, and those numbers are as of last week. As there was market interruption in the early 1990s and continued deterioration of the state's insurance market into around 2008, 2009, regulators agreed that there was a need to stabilize the insurance market, especially on the southern coastal parts of Alabama. I think it was 2007, we particularly saw the market have about a negative 7% in return in the investment. And in 2011, after the super tornado outbreak, the losses were even higher than that. In order to stabilize the market, it was realized that in order to change the economics after a storm, you had to act before the storm to prevent the loss. Through legislative support, and the resilience movement began for Alabama, and that's when Strengthen Alabama Homes was established. Fast forward a decade, we're starting to see the development of other programs in states, like I mentioned before, with Tom Travis in Louisiana. I've personally worked with those programs. I've also worked with the development of programs in North Carolina, Minnesota, and last week I received an email from a commissioner in Kentucky that their legislation had been passed and they will start standing up a program, or at least planning the program around June of this year. It's apparent that states are using the Alabama model to establish these programs, and why should we reinvent the wheel? But the program is absolutely critical, in my opinion, for the success of the insurance markets in the states that are most vulnerable to losses due to these natural disasters. In response to the need that commissioners are telling the NAIC that they need for resources, the NAIC's Center for Insurance Research and Policy has established the Resiliency Hub. The Resiliency Hub is designed to support those insurance commissioners in establishing the operations of these types of programs. The type of support that the Hub can provide is things like data analysis, program operation design and implementation strategy, and provide subject matter experts and resources and counsel on the operation of these programs. and to help ensure the success of the departments and to establish a program. The NAIC is there to support commissioners. I would like to add that the Resilience Hub is also a resource for insurance legislators. We have experience and resources to support any legislation the state may be considering to use to include NCOIL. We would certainly are a resource to help you in any questions or any concerns you may have because of our experience with that. So if your state is considering enacting legislation to establish a program like the Strengthen Alabama Homes program, and then again the one in Louisiana, please feel free to reach out to me. We can discuss the feasibility to include options for funding that doesn't necessarily come from your state general fund, which is always a good thing. I would like very much to be a resource or in some way help you with the work that your state is trying to do. So again, thank you for having me here today to allow me to say a few words, and I'm open to any questions that you may have.
Thank you, Mr. Powell. Appreciate that, and we will hold questions until we hear from everyone on the panel. Next up is Frank O'Brien of APCIA.
Thank you, Mr. Chairman. And good morning, everyone. Good to be before you once again. For the record, Frank O'Brien with the American Property Casualty Insurance Association. We have spent a couple of minutes over the course of this meeting yesterday talking with the commissioners regarding issues of availability and affordability. Later today, there'll be a general session that will take a look at that topic as well. Availability and affordability issues, I don't have to tell you because you're seeing it in your legislatures and you're getting calls from your constituents, etc. The key to improving insurance affordability and availability is reducing overall losses. Mitigation of the type that is taking place in Alabama. Legislation that has just recently passed in Kentucky is a key to making sure that availability and affordability issues can be resolved over time. Mitigation prevents losses, prevents loss of life, prevents loss of property. It is just the right thing to do. The legislation that is before NCOIL right now provides a good basis to begin to develop a model for the states to utilize. NCOIL is the place, we believe, to have that discussion and for NCOIL to play the role that it has played in previous years as the convener of insurance legislators on insurance issues. We think this particular draft is just that, a draft. It has some things that we think need to be fixed, but it provides a good basis for moving forward. And we look forward to working with NCOIL on this issue. With that, Mr. Chairman.
Thank you, Frank. I appreciate that. Thank you so much. Next up is Wes Bissett of
Thank you, Mr.
IIAB.
Chairman. I'm going to assume Frank's time and use my time. So for the record, I'm Wes Bissett with the Independent Insurance Agents and Brokers of America, the Big I. And before I address the specific model proposal, I do want to thank NCOIL for its recent focus on the hard market crisis that we find ourselves in. It's really an unparalleled crisis in recent years. It's hitting every part of the country. Oklahoma, Kentucky, Mr. Vice Chairman, not just coasts and earthquake-prone areas. And there are not a lot of great public policy responses that immediately address the hard market. But there are things you can do to help reduce losses and take unnecessary costs out of the system. This model is a great way in which you can go about doing that. You can stop certain claims from ever happening with a model like this. You're going to talk about a model law later this afternoon in the Financial Services Committee, the third-party litigation finance proposal that would help, I think, also remove costs from the system. And we greatly appreciate the focus of NCOIL on the hard market right now. With regard to this proposal, we really thank Representative Dunnigan for his work on this. We think this is a fantastic proposal. It's got two components. You've heard most about Section 3 already. Let me talk a little bit about that. The first component, Section 3, creates the grant program that you've heard Brian and Frank talk about. It would help and encourage consumers to retrofit and upgrade their roofs. It does have a proven track record in Alabama. Other states are picking up on the concept and already considering laws of their own. So there is a very much a need for a vetted model law in this area. The interest is there. States are acting. It's a great opportunity for NCOIL to lead. As you consider that particular section, we'd encourage this committee to consider perhaps adding a little additional meat to the bone. The proposal is drafted right now, gives a significant amount of power and authority and discretion to insurance commissioners to design these programs as they see fit. And a certain amount of discretion is helpful, right? You want this to be a living and breathing program and not have to go in and change it statutorily all the time. But we do think in certain areas it would be helpful to be a little bit more specific. You know, how can grant dollars be used? What can grant dollars not be used on? What types of homes can receive grants like this? Can second homes or vacation homes receive grants like this? And what are the eligibility requirements that apply to contractors and evaluators? We think those are important elements. Section 4 is the second component of the bill, and this addresses how consumers will be treated from an insurance perspective after they have installed a fortified roof. If a consumer takes an action that notably reduces the likelihood that they're going to have a claim, they will naturally expect that there will be some sort of insurance benefit that follows from that. And that's what this section ensures. Companies tell us all of the time that they base their rates, they establish the rates based on the potential for losses. They also tell us that the likelihood for a roof-related loss drops significantly if a fortified roof is put into place. And so all this section does is hold the insurer's feet to the fire to some degree. It says that a consumer that takes the steps that have been suggested by insurers now for several years, that they can receive some corresponding benefit from that. This section is not prescriptive. That benefit could come in the form of a reduction in premiums, an adjustment in the deductible, or in other ways. It doesn't prescribe, any particular dollar amount or percentage. It leaves all of those things to the insurer, and they can take whatever action is warranted from an actuarial perspective. And if we're talking about incentives, we cannot establish a program that we say, hey, consumers, go out and put on, this great fortified roof, go on and put it on, but you maybe not get any sort of insurance benefit from that at the end. There's got to be something that comes from that, and leaving that in the hands of, we think, leaving the discretion in the hands of the company is appropriate, but there ought to be some requirement to have a corresponding insurance benefit that stems from that. In terms of potential revisions to that section, we do encourage some revisions to subsection C. We think it would be helpful to delete paragraph C4, for example, which imposes unnecessary paperwork requirements on consumers. And we're concerned that paragraph C5 is a little bit inflexible. It could potentially make it difficult for insurers and agents to work with consumers to make sure that they get the discounts or credits that are warranted. Before I wrap up, there are a couple of related issues to this that I wanted to flag for you as you think about this model and state mitigation grants in particular. First, this proposal was sort of built on, for very valid reasons, the fantastic research and good standard-setting work that IBHS has done for years. They are the gold standard. You've heard from them in the past. But as states consider and enact laws of this nature, it's going to be important for state policymakers to monitor the work of IBHS. They're going to be given considerable authority to set standards. They're going to have the power to approve or not approve contractors and evaluators, and you as policymakers are going to want to make sure that they're doing that work appropriately and not being inappropriately enriched as that happens. Our focus in this area has been piqued recently by what we view as a very troubling decision by IBHS. Until recently, IBHS had a database that all insurers and agents in the country could go on and see which properties had met this fortified roof standard. And it was helpful for my members to be able to look at that and ensure that their customers who had a fortified roof were getting the discounts or credits that were warranted. But what IBHS did, in its infinite wisdom, and I say that as sarcastically as I possibly can, they decided that they would close off access to that database only to the insurance companies that pay dues to IBHS. And so my members no longer have the ability to go on this website to see which homes have that fortified roof. And it makes it harder for my members to serve their customers effectively. And it's a private benefit to the members of IBHS now. It makes them look more like a trade association and deviates from their traditional nonprofit mission. We are encouraging IBHS to reconsider this decision, and companies perhaps in this room or members of NCOIL that feel the same way that we do, we'd encourage them to weigh in. Secondly, I want to note that state mitigation grants of this nature are currently subject to federal taxation. There is legislation in Washington that would change that. The Disaster Mitigation and Tax Parity Act would eliminate that sort of taxation. We had over 1,000 insurance agents in DC this week lobbying on that bill, trying to get more co-sponsors on it, and it might be something that NCOIL would want to take a look at as it considers this model as well, and as more states establish grant programs. So with that, Mr. Chairman, thank you. Representative Dunnigan, thank you for your work on this, and we look forward to working with both you and the committee.
Thank you, Wes. I appreciate that. John from NAMIC, would you like to add any comments? Universe does not want you to, I guess.
Hello. Does that work? Yeah, that's good. John Schnautz, National Association of Mutual Insurance Companies. Appreciate the opportunity to address the committee on this issue again. So I do think, to build on one of the points that was made earlier, this is a good example of talking about the answers before you've asked the questions. There's a definite tie-in to the general session later about availability and affordability, and we think this is, particularly in the funding aspect, this is one of the things that can be done at the state level to actually address some of the affordability and availability issues. And part of the reason for that is it's focused in the right area from our perspective, and that is, how do you mitigate, how do you deal with the underlying risk that is driving insurance rates? And we think this is a good example of the right focus. Hope you hear more about that later today. I think you will. Also want to express some gratitude to Representative Dunnigan and to NCOIL. When this issue, the mitigation discount issue, was first brought up last year in regard to amendments potentially to the building code model, we're in favor of resilience. Is that the fire alarm? I have to stop if it is. I don't think so.
In a room full of insurance professionals, someone here should know
It's not really loud enough to be a good fire alarm, but
whether this place is on fire.
yeah. Well, anyway, it's a good test of my concentration.
If we had met at the Parthenon, this wouldn't have happened.
Yeah.
And I'll be making note of that.
The Parthenon is fortified, I have reason to believe, so.
We will maybe suspend for just a moment to make sure that we're not all, it seems to be getting louder. Everything's fine? It's just ambient background noise? Oh.
It's just a what?
The toaster, apparently. Okay. If we had a safe toaster act that made sure that all,
Would there be a discount if there was a safe toaster act?
well, we should mandate that there be a discount if people buy the safer toasters. All right, Mr. Schnetz, please continue.
I'll do my best. So we do appreciate that those two conversations were delinked. We urged NCOIL to go ahead and readopt the building code model with some improvements. That was done, and that's much appreciated. We had also at that time encouraged a couple things. One was looking at the direct funding issue for resilience. That is in the model in front of you right now, so thank you for that. Had also suggested that you look at the catastrophe and mitigation savings accounts idea, and I think you're going to hear more about that at the panel later today as well. So in terms of where to go from here, a few points. I guess the first one is, please don't forget, even though it's already been readopted, don't forget about the crucial role of building codes here. In a sense, what we're talking about here is an enhancement going beyond the building code. But don't lose sight of the fact 33 states in the country either do not have a statewide baseline building code or they do not enforce the one that they have. So we have some work to do to go back to the building code to get to the best possible baseline on which these kind of improvements can be made, and we think it's important to keep that linkage there. Second point on the funding model specifically, and I think Wes made some great points that we would echo on the specific issues that need to be considered and tweaked there, but another one is, and I think this is something all of y'all are familiar with as state legislators, don't forget about federal funding. The federal government, to its credit, in the last 10 years or so, has gotten more serious about front-end resilience funding, and that is in part because of losses through the flood insurance program and other issues where so much money is continually put into the back-end response, and they have finally woken up to the idea of what if we do some of that up front. Programs like the BRIC program, those sorts of funds are already there. They can be used in limited fashion for these kinds of programs. They're very competitive. We have urged the federal government to expand that. I think that's a great thing for NCOIL to do. Use that money to the extent that you can. I would also add one of the most important criteria there is having a statewide enforced building code if you want to be competitive. So again, to build that linkage in. Just to briefly pivot to the discounts, and then I'll stop. So this is obviously the part of the proposal that gives us the most concern, but I will say we are very open to having this conversation as an initial point. The first point I would make is we would urge, and I think this is being followed, I'm not suggesting otherwise, but please keep it up, that the discount proposal be considered as part of a list of other items, that you start with building codes, that you go to funding, and that discounts is a follow-on idea to that, and that no one has the idea that you should go straight to the end and just do the discount. And we don't really have to hypothesize about what happens in that circumstance because, Mr. Chairman, your home state of Oklahoma did a discount without any of the rest of it and got somewhere in the neighborhood of a double-digit number of fortified homes out of it, and that's not doing much. And Alabama did the opposite and showed actual results. So we have many concerns about the discount, but the main point is if you do it alone, it doesn't do anything, and it is that simple in terms of the impact on the ground. The other point I would make is mitigation discounts do already exist, and there is already a market incentive for companies to use them because of the very fact that they do reduce the underlying risk. To Wes's point about there should be an insurance benefit, I don't think we disagree with that conceptually. In some cases, of course, the insurance benefit could be the availability of insurance itself. And so, you know, we talk about availability, that is a real issue, and I don't think we want to lose sight of that. But to be clear, we're not suggesting that we don't think a well-structured discount can be part of this proposal. We think it can. Just keep those issues in mind, and we would encourage as much flexibility as possible in the way you structure it. Don't let it get in the way of companies still innovating and competing in this area. Don't let it turn into you do Y and you get X discount, and that applies across the entire market. And I think that's the approach we would prefer to avoid. The final point I want to make, just because it hasn't been addressed yet. When the model came up last year, I know Representative Dunnigan's, one of his main concerns was wildfire, understandably, from Utah. All the proposals before you today are about wind and hail. And that's because some states have sort of cracked the code, we think, on how to structure a program there and how to do discounts. The proposals you have today don't address wildfire, and it is not as easy an issue to address. And, oh, the toaster's back. And wildfire. And one of the reasons for that is that, and I know you've heard about this last year, wildfire is a trickier peril. You can't do as much sort of cafeteria-style mitigation and expect to get proportionate benefits. If you look at the IBHS research, you got to do it all if you really want to get the benefit. And the second issue I would just briefly mention is community resilience there is a bigger deal. If I mitigate my home a lot against wildfire and my neighbors do nothing, the benefit is much more attenuated than it is in the wind and hail world. So I'll stop there. We hope to be part of this conversation going forward.
Thank you, John. Appreciate that. And I really, I like to be an easygoing guy, but I'm going to have to bring the hammer down and say no more toaster use this morning until we figure out what's going on, okay? It's not necessarily your fault. We're going to figure this out. We will now open this up to questions from legislators. I know Representative Lehman has a question, and Pat will make sure that everyone else gets on the list. Representative Lehman.
All right, thank you, Mr. Chair, and I agree with on the toaster use. Something that you said, John, that really kind of caught my attention is when you said about, we were talking about all about the loss mitigation and incentives, et cetera, and you said it could possibly get to availability itself. So that's always been my concern on a lot of this technology is availability. Whether you give a discount or not, that can be debated, and I think you should. But on the availability issue, and then you brought up fire at the end of this, if you're, if carriers are going to continue to use more and more technology on my house, and now you're seeing the tree scores, where we can say, hey, you've got too many trees around your house, and are we going to get to where, are you going to give me an incentive to cut down trees, which would help mitigate fire? Are you going to give an incentive? What have we given incentives on the coastal states when it comes to hurricane proofing homes? I know you've seen some stuff in the feds on condo restrictions and stuff. My biggest concern kind of all of this is, are we going to begin to push people out of the market of availability, what if I can't get the grant? Because I'm going to have to put some of my own skin in the game, right? So, but I can't do that. So I still have that asphalt roof. I still have that, 5 big trees around my house. Am I going to reach a point where availability itself becomes an issue?
So, fortunately, I don't think most of the country is at that point with the insurance market as a whole. But the idea that every company could write everywhere if the certain mitigation was done, I don't think is accurate. I mean, there are companies who simply cannot expand their risk profile in certain states for solvency reasons that things can be done about, but they're big picture things. They're things like this that would deal with underlying risk. And I didn't want to leave the impression that a mitigation discount is always the end result. There may be companies for whom if you do mitigation, you get them to a point that their risk profile for that state changes and they can at least offer coverage. So that's really the point I wanted to get to. I think those sort of concerns are there. I mean, the California market right now is a pretty good example. I mean, there is a real on-the-ground availability issue with the broad market that is hard to overestimate. I mean, it's a real thing. Now, across the country, is that everywhere? No, and I hope it won't get there. But the impression I really wanted to leave is sometimes the benefit is just availability, just expanding the number of carriers who can actually write there in the first place, that the mitigation discount may not always be the piece that that's what really the mitigation creates is a discount. So.
And I appreciate that. I think what I'm seeing right now in a hard market is it's usually what ushers in the restrictive market. Because it is an opportunity to say, I won't write a house anymore that has X, or I won't write a property that has Y. And so if that becomes the standard, I think we're really going to have an availability problem with a good portion of homes in the United States. And we're in a hail area. I get that. Indiana is. We've had some really bad hailstorms recently. But if we start to say, unless you have that kind of a roof, we won't write you. That's where I think some of this has the potential. It hasn't gone there yet, but I think it really has the potential of going. That's very concerning as a public policy maker.
Representative Paul, Dennis Paul, would you like to go? No? You're recognized.
Yeah, thank you, Chairman. This is Dennis Paul. I'm a rep from Texas, and I'm a structural engineer and actually practice on the coast. So I had a couple of questions here, and I think, John, you mentioned a little bit that you're going to go beyond the codes. That was the first thing, that you're not going to accept the building code, you want to go beyond. What would that mean? Where do you go beyond? What does that mean?
So I was referring to the fortified designation as going beyond. Of course, in Texas, you've got the WPI process through TWIA, which it's sort of a quasi-enhanced code because if you ever want to get into the wind market there, as you know, you've got to qualify for that. And so that sort of acts as an unofficial, even in the unincorporated areas, an unofficial enforced code in those barrier counties. But what I was specifically referring to is the fortified designation by its very nature is going beyond what a typical building code would be.
Yeah, and somebody
Maybe not in a
mentioned a
coastal.
fortified roof, but so what is a fortified roof? What would you do that's different? The building code allows you to make sure you can go through the wind speed at that time that's been determined by the code.
Yeah, one of the other.
What would you do beyond that? What does it mean to be a fortified roof?
So one of the other panelists is probably better to answer that. I'm not going to be able to give you the technical specifications for what goes into making the roof fortified, but it's essentially around keeping it from blowing off, keeping it from being as damaged by hail, all the sort of perils, but all focused on wind and hail. But one of the other panelists may be able to address that better than I can.
Okay.
Sir, I can address that for you. So when we say fortified, we're actually using that as a general term, right? Because there are actually 3 levels of fortified. And to your point, you know, your question, what is fortified and how is that beyond code if the minimum code protects against wind? Well, some of the components that go into the fortified program are things like waterproofing. So that even if you lose the shingles on your home home still stays waterproof because of a couple of different technologies that can be applied. So that's one particular element. Another one would be, you know, along with severe convective storms especially, fortified protects your home against hail. So although, you know, you're thinking of it from a wind perspective and the roof staying on, it also is resilient to those impacts of the hail and damaging the shingles so that they don't come off from the wind. So those are just some of the elements. But like I said, there are 3 levels of fortified, and there are actually 2 different fortified programs. There's one for hurricane, and there's one for high wind. So it's a little more complex than just fortified, but we use fortified as kind of a general term to describe
All right. I know there's a society that's running around trying to say, hey, that you could get this certification. The other thing was, as far as enforcement going on, y'all mentioned something about like a statewide code enforcement or agency. You know, obviously, you know, the way it is in Texas, I would imagine most states, local governments certify the code. Texas does have a minimum code, but there's no enforcement. But the local communities also have their own code, and it's usually stronger than what the state minimum is, and they do enforce it. If you're out in the county somewhere that your county doesn't, there's no enforcement. So you're suggesting that the only way to do this would be have statewide certification of the structure. As John mentioned, you know, we have this TDI process in Texas, which is a convoluted thing, but it still only tells you to build to the building code. So how would you do enforcement of this?
Well, as part of the fortified certification, there's actually a third-party evaluator that's involved that is trained to understand building construction and also the application of the fortified program to that particular structure. So what you have is you have a third-party evaluator that will come in and evaluate that. Now, one thing that we did with the Strengthen Alabama Homes program is we required building permits to be purchased for every construction project. So now what you have is you have your building code officials that have a follow-up, if they so choose, to enforce, to make sure that at least the minimum code is met, which it will be with fortified more than likely, not only following the contractors, but also the evaluators. So there is a check and balance that's built into the process.
So this
Sorry,
third-party
Senior
person could go in there.
Hold on. We've got about 7 more people. I'll get you back in the queue, but I want to make sure.
All right,
Sarge
thanks,
is
guys.
last, and I don't want to see what happens if he doesn't get to ask his question. Representative Felskowski, you are next. Senator Felskowski, I'm sorry for promoting you.
It used to be representative, so I'll cut you some slack on that. And I would have liked to have been outside too. So I do have a question. I want to know a couple of things. So this is a grant program. I want to know, why is it a grant program instead of a revolving loan fund? Because this is for private home ownership. And then why is this not income? Why is there not like an income or a sliding scale on this? Because, I mean, we even heard like is this going to apply to secondary homes? So you're asking people whose homes may be already fortified to now cough up taxpayer dollars to fortify homes that maybe not already fortified. So why is this a grant program instead of a maybe low interest or a revolving loan fund? why did we go in this direction? And then why is there not like a sliding income scale on this?
Okay, so a state could set it up as a revolving loan. And we looked at a couple of initiatives. We partnered with Federal Home Loan Bank at one time out of Atlanta.
Could you be like a little into the mic a little bit more, please?
Oh, I'm sorry. Yeah, I mean, a state could set it up as a revolving loan program if they so choose to do that. I think it really depends on, looking at, the source of funding and then the sustainability of the program. So the Strengthen Alabama Homes program does not use money from the Alabama's general fund, so it does not come out of the tax base. The program is solely funded, well, I shouldn't say solely funded, it's mostly funded by the insurance industry. The state, or at least the Department of Insurance, receives fees, money for fees that insurance companies pay, premium tax, things like that. And legislatively, we're able to gain authority to carve off just a portion of that, to put that into this grant program. And we did that initially and also socialized this with the insurance industry, and they were completely and 100% on board with this. When you're able to mitigate a number of homes like we have in Alabama, and you start seeing the market stabilize, you start seeing prices of insurance coming down, companies coming in and writing business, then we've effectively created some level of community resiliency in a lot of areas. And also the risk pool has reduced, right? The risk of that pool is reduced for those books of business. So insurance companies are actually able to negotiate more favorable rates on their reinsurance. So there's a cascading effect to this. Now, as far as the sliding scale, we tried that. And what we found is that folks who could potentially receive more money than others would, and we actually had a sliding scale on this. So if you were economically challenged, you received a percentage, and we based, just for equitable reasons, we based it on like the HUD requirements for loans or for benefits. And what we found is that those that were most economically challenged did not have the free cash flow in the household to meet whatever gap cost that was created by mitigating the homes. So if a home was $9,000 to mitigate, and say we granted $7,500, that difference was just not available to those that were economically challenged. And conversely, for those that had the means to pay for the mitigation that applied for these grants, perhaps they received $2,000 or $3,000. And in cases along the coast, the deductible for a loss was less than that, so they didn't want to fork out the additional $7,000 or $8,000. So we wanted to make it equitable and just make it open to everyone without an income cap. But we also limited it to $10,000, and the reason we did that was because the average household, especially those for the lower income, it was costing about $9,200 to $9,300. So we were able to pay 100% for them, and there was no out-of-pocket cost as far as the mitigation grant was concerned.
Thank you.
Thank you so much for that detailed answer. I'm going to do what the Republican presiding officers in Oklahoma have to do because of how many questions I ask on the floor, and move to one question, one follow-up for the remaining. Representative McFall is next.
My question was actually just asked and answered. Thank you.
How efficient. Thank you so much. Representative Cheney, you are recognized.
Thank you, Mr. Chair. Linda Cheney from the state of Florida. So we don't have any issues with. I'm prophesying for next year. So in 22-23, we did the My Safe Florida Home Grant Program, where the homeowner would put in $1, the state would give them $2, up to $10,000 on the homesteaded property only for roofs, windows, doors. We added garage doors in the next session. Gave you a free inspection, no obligation. The program is doing well. We refunded it this session in 24, and we added a My Safe Florida condo pilot program because we have so many condominiums. Our biggest challenge with this program is the funding. There's a lot more need, than funds, but we're happy to help our homeowners. What's been reported is 70% of the homeowners who took advantage of it have either seen their insurance rates stabilize or decrease with an average savings of $1,000 a year. So we're feeling good about it. On top, we layered on top of that tax-free holidays. So tax-free for any of these mitigate windows, doors, hurricane things. The feedback I'm getting, that the question I have for you is because of the FEMA limitations on the work you can do on your home, 50% of the value of the property, and our communities set their own look-back rates. So we have some communities with 0, some with 1 year, and the beach communities have 5 years. So that's really limiting for mitigation purposes is what I'm seeing. And some homeowners have run into, they get all excited, they take the MySafe Florida home, they've already done some things, now they hit their FEMA cap, and some of them have had like a problem with their roof that they hadn't anticipated, and then they want to go replace their roof, and they're not allowed to do that, they've already hit their FEMA cap, and now they're losing their insurance. So my question to you is, are you hearing anything around these FEMA lookbacks, and is it playing into this whole grant scenario?
Yes, and I've had a lot of dealings with FEMA and their funding and funding requirements, and another thing that you're speaking to is also reflected in their benefit cost analysis that's done for qualifying for funds. And I'm speaking now with my old deputy commissioner hat on it at the Alabama Department of Insurance. If we can solve the problem within the state, we're going to do it within the state. So looking at alternative ways to mitigate or to pay for mitigation is really the approach that we took in that case, because if you're relying on the federal government for that, that's going to be a long, hard road to go down. And a couple of points on the mitigation money that comes from the federal government as well is that it's going to require a match, and the question is who's going to pay that match? And then also it's issued on a reimbursement basis. So for the most part, the state's going to have to pay for it up front. The contractor's not going to wait 7 to 10 years to get reimbursed for that money. You know, another thing that you could consider as an alternative is to consider maybe a roof endorsement, where for a fee, an insurance company can offer this endorsement, and at the time of total loss of a roof and it has to be replaced, that it's replaced with a fortified roof. Alabama did that. We came up with that concept years ago and received legislative authority to enact that. So we have a roof endorsement, and the only thing we did was basically state those terms, and that also that it was to be issued at the time of the sale of the policy or at first renewal.
Thank you. Representative Mayfield, you are next. Excellent, thank you. Representative Tedford of Oklahoma. Keep it quick.
Thank you, Chairman. My question is from Mr. Powell. I'd ask you to maybe expand on your comments of how Alabama's created a culture of fortified homes. I'm assuming that this legislation can be seen as a pathway to where those in wind-prone areas just voluntarily build fortified homes. That's the standard. That's the expectation, irrespective of the credit. Is that what you're seeing in Alabama? And what were all the factors that went into building that culture?
Well, you know, part of this is, you know, an education piece on the benefits of fortified. And once people started understanding what fortified really is, and it was demonstrated by us being able to put money into the grants and actually fortifying the homes after the storms, damage assessments were done, and you could see where there was real tangible results. The president of IBHS, Roy Wright, he usually makes this comment. He says that when people come up and ask him, well, how can you tell which homes are fortified and which homes are not? And he says, well, we color-coded them for you. The ones that have the roof on them, those are fortified. The ones that are blue are not. So as you understand, as you educate people and you start seeing the tangible results, what you find is that communities will embrace this, And Alabama does not have a statewide building code, but what has happened is that local jurisdictions have adopted the fortified standard as part of their jurisdictional building code. So we're starting to see that grow throughout the state, and I believe this year and even last year we've been pushing more toward a statewide building code that includes fortified as the roofing standard.
Follow-up, Mr. Chairman.
Okay.
So what's interesting to me is in states that have very high wind hail deductibles, to me, one of the benefit of the fortified homes is the homeowner post-claim, if the roof sustains the wind event, that doesn't have to pay the deductible that his neighbors might. I very rarely hear that as a benefit. Are you seeing that as becoming a benefit in those areas?
Would you mind restating your question again? I had a little
Yeah,
bit of
so
feedback.
I'm curious why to fortify the home in light of preventing to have to pay a large wind hail deductible is not more of seen as a benefit from the homeowners or promoted as a benefit of this program.
Yes, yes.
Representative Pollock, better known as Sarge, you are recognized.
Thank you, Mr. Chairman. Just a comment. I've always growing up thinking Oklahoma was the tornado alley in our country. I think now it's Kentucky. We've actually had 3 tornadoes already this year touching down, making damage. So I echo Frank's comment. We have got to do something. And we did here in the state of Kentucky. We worked with Wes, we worked with John's team, we put some stuff together. We really, and I want to give a big shout out to my commissioner, Sharon Clark, Department of Insurance. And when we talk about funding, you can talk about we designated $5 million toward this pilot program. That is to help contractors get certified. That is to help single homeowners look about getting a fortified roof just to find some way to offset these claims that we're seeing. A year ago in March, 70-mile-an-hour winds came all the way across the state of Kentucky. So we are looking at doing something, and we did, and I want to obviously thank everybody who's involved in making that House Bill 256. This is a commercial. House Bill 256, legislature.ky.gov. Look at that. Is it a perfect bill? Yes. No, I'm just kidding. But seriously, we had to take action, and I just want to thank everybody involved in making that bill happen. We got one nay, and I'm going to find out who that is when I get back. We're in veto days, but folks, look at this piece of look at this model. Let's make this thing correct, make it look the best it can be, and do some good here with this piece of model. Thank you.
Thank you, Sarge. Appreciate that, and thank you, everyone, for your questions. Before we move on, Representative Dunnigan, do you have any closing comments?
Briefly, so for me, this has been an excellent discussion. A lot of good ideas. I appreciate Alabama and Florida and Kentucky from sharing what they're doing, and I'll be in touch with some of the sponsors or the presenters here, and we'll continue to move forward. Thank you.
Thank you, Representative, for your work on this. We will be discussing this throughout the year and hopefully have something ready for consideration by the fall meeting in November. In the meantime, if you have any questions or comments, please reach out to me, Representative Dunnigan, or the INCOIL staff. Next on the agenda, we're going to continue our discussion on the Catalytic Converter Theft Prevention Model Act and also a resolution in support of strengthening state laws to prevent catalytic converter theft. We've been discussing this issue since the spring meeting of last year, and during the interim Zoom this year we had in February, there was a discussion around whether the committee should proceed with the development of a model or instead develop a resolution. The idea behind a resolution is that as written now, this legislation is more in the scope of criminal code as opposed to insurance code. So we want to have a discussion about whether we want to move forward with a resolution or the Model Act. So that leads us to today. We have a decision to make on whether to move forward with the model or the resolution. You can view the model on page 198 of your INCOIL Bibles, and the resolution is on page 204, and they're on the website and app as well. So I'll turn things over to Representative Oliverson, who's the sponsor of the model. Representative President Oliverson, would you like to?
Yeah,
Thank you, Mr. Chairman. I appreciate the opportunity to continue this discussion. As you referenced during our interim meeting, I think I made my point pretty clear about the importance of this model. Even though it may not necessarily go through an insurance committee, that is not unprecedented for an NCOIL model to do. The reality is just simply that, you know, we're spending a tremendous amount of time at this meeting talking about cost drivers and, quote, hard markets and property and casualty, and everybody's looking for solutions and things that we can do to help lower the costs and increase the availability of insurance. And the fact of the matter is that catalytic converter theft across our states continues to be a cost driver in the property and casualty and the automobile marketplace. And so taking a strong position on the issue and making sure that there are appropriate criminal jurisprudence actions that are occurring, that are deterring this is something that we can do. You know, we can't control insurance rates as far as what reinsurance would charge. We can't necessarily control the weather, but we can certainly deter criminal activity. And I think that we have to take the wins where we can get them. We have to look for things that we can point to that are cost drivers to the system and say that this is something that we can do to attempt to control insurance costs for our consumers in our state. So I do understand that there are concerns with the fact that this model may not necessarily be laser focused on insurance. And so with respect to those concerns, I am happy to offer an amendment, which I believe you have before you, that makes it slightly more insurance centric as a peace offering. And hopefully that will meet with approval. But again, this is incredibly important. And I would point out that we have this concept of an advisory commission that I propose in the amendment. This is actually very similar to the Deputy Damon Almendarez Act that we passed in Texas, which is named in honor of a Harris County Sheriff's deputy who was shot to death, unfortunately, in the line of duty when he confronted a gang of organized criminals that were attempting to steal catalytic converters. So there are tangible costs and there are lives being lost around our country with regards to this particular issue. And I think we owe it to the insurance industry, but also our law enforcement community to take a strong stance on this. So I look forward to the discussion today. I just am firmly in support of the model and would like to see that move forward, but obviously respect the committee's decision either way. Thank you, Mr. Chairman.
You're welcome. You're welcome. I enjoyed every word that you said. I was visiting a toaster outside. All right. Thank you, Tom. I've been informed I am supposed to have Edmund talk about your resolution now.
So thank you, Mr. Chairman, and I appreciate it, and I also appreciate the peace offering that was just sent to us by Representative Oliverson. Of course, I support the concept behind the model, however, and in fact, we've passed catalytic converter theft laws in Louisiana. However, I think because it falls outside the area of insurance, I think that the resolution still sends the strong message that Representative Oliverson has spoken about. The other thing I would tell you is this. I can tell you in my state of Louisiana, when I go to the insurance committee and I say that this is in-call model legislation, I rarely have any opposition. It usually flies through. And I would imagine in most states that is the issue. I don't think that if I go to my Administration of General Criminal Justice Committee and say that this is in-call model legislation, that is going to have the same effect. These bills either go through Commerce, and I'm going to speak for Louisiana, whether it goes through Commerce or criminal justice, it doesn't go through insurance. And part of my fear is that by stepping outside of our lane, so to speak, that we somehow diminish the effect that in-call model legislation has. And while I know we've done this in limited occasions in the past, I would not want to further that precedent by continuing to do it. I think the resolution sends a strong message of where NCOIL stands on this issue. I think it supports what the organization wants to do as far as sending that message. However, again, I'm like Representative Oliverson. I'm going to respect the will of this committee and whatever we decide. But I do think that the resolution accomplishes that goal while still keeping the brand of NCOIL intact. So I'll turn it back over to you, Mr. Chair.
Thank you, Representative Jordan. I appreciate both of you and your perspectives, and I do want members of the committee to speak up and let us know what you think after we hear from Mr. DeCampos. We do want to find a way forward today on this, whether we go model or resolution, and a reminder that we've got until about 10:30 to do that. So, maybe someday. But Mr. DeCampos of NICB, would you like to offer some comments?
Well, first, thank you, Mr. Chairman, for the promotion. So that was very, very kind of you. My name is Eric DeCampos, and I represent the National Insurance Crime Bureau. NICB is a nonprofit organization that works with state and local law enforcement, as well as member insurance companies to detect, prevent, and deter insurance crimes. So I'm here to speak in favor of the model today. Over the last year, we've seen plenty of examples from insurers and law enforcement agencies attesting to the effectiveness of state legislation to help combat catalytic converter thefts. And just to give you an example, Georgia enacted a catalytic converter bill last year that went into effect on July 1st. When we're looking at catalytic converter thefts reported to NICB from the first half of 2023 and compare that to the second half, the decrease was 72%. So I really want to focus here that these types of bills do work. And so now is not the time for us to take our foot off the gas, but rather to move forward with a model, not a resolution, but this model, which will provide important standards that will help address catalytic converter thefts and the impact that these thefts have on the insurance industry. Just for an example, within this model, it improves record-keeping requirements, which provides investigators with more information that they need for catalytic converter theft investigations. And also, this model has the potential to help reduce costs to insurers and consumers alike who are faced with expensive vehicle repair bills in catalytic converter replacements. And so I respectfully urge this committee to adopt this model. It is not unprecedented. We've seen examples in the past from predatory towing, airbag, runner cappers, different types of models that address insurance fraud, that address insurance crimes, and this is no different. And so with that, thank you, Mr. Chairman, and the committee for the opportunity to speak today. And I also wish to thank the sponsors for continuing to move this model forward. NICB very much appreciates all of you. Thank you.
Thank you, Eric. I appreciate that. Representative Cheney, would you like to offer some comments?
Yes, thank you, Mr. Chair. In the state of Florida, we adopted a catalytic converter statute very similar to this one. Ours may even be a little tougher than this. And the Sheriff's Association was very grateful that we did this. And it most definitely is tied to auto insurance rates, which was one of the main drivers of the reason that we adopted this. And I would agree with the Honorable Mr. Oliverson that this is definitely important to the insurance industry, to our constituents. I think they're much more concerned that we take action to reduce their auto insurance rates, and I think they have zero concern about the NCOIL brand. And I think taking action on the model legislation is absolutely not only what we should do, but what we have an obligation to do for our constituents.
Thank you, Representative Cheney. Representative Westfall, Delegate Westfall, you are next.
Yeah, no problem. Thank you, Mr. Chair. I reduced the model legislation that President Alderson has got before us in West Virginia. We already have some laws dealing with catalytic converter thefts, and I put the part in we did not have. It did not go to the banking insurance. It went to a judiciary committee. It was put on the agenda, was pulled when the auto different people came and said, hey, this is going too far. This will hinder our good recycling companies. We'll still have the people at the Walmart parking lots on Sunday night buying the catalytic converters and all due respect to Kentucky, but taking Kentucky and selling them. So, so I think we need a model, we need a model act that all states can use. Incoil's known in West Virginia, not just banking insurance, but they hear enough from me about Incoil model acts that every delegate and senator know what Incoil is. So I think it needs to be a model act, not a resolution. I think it'll have more teeth to it. I am not going to be there next year, but I think our current vice chair will take this back and run it again and try to see if we can do it better. Because it is a problem in West Virginia. It's a problem in all states. So I think we need to have a model act, Kurt, personally.
Thank you, Delegate Westphal. Representative Lampton.
Thank you, Chair. I would agree with my colleagues. Rarely do we have an opportunity to pass legislation that provides downward pressure on insurance rates, whether it goes to a criminal justice committee or insurance committee or judiciary committee. It's quite frankly irrelevant. This is an insurance matter. Recently, when I first started and joined NCOIL, my first meeting, NCOIL passed the distracted driving model legislation. I took that back to my state, and because of that, I was able to partner with a former law enforcement legislator, and we were able to get that bill passed into law. And we immediately took up the NCOIL model distracted driving bill. I think this is very much similar to the distracted driving bill. It went through our criminal justice committee. It didn't go through insurance. So I think we need to do the model act. It lends credibility, and it did in our state with distracted driving. And right now, we're carrying it through Ohio through a former Montgomery County sheriff who's running the bill. The bill in Ohio is much stronger than this one, but I do encourage us to go with the model act. It'll lend credibility, and it needs to be nationwide for it to have a much larger effect. Is if we do it in Ohio, what's going to happen? They're going to go to thefts are going to occur along the border. They'll go to other states and sell these things. So if more states adopt the model legislation, it'll be much more difficult for the thefts to occur and to get these catalytic converters sold at a profit. Thank you.
Thank you, Representative. Senator Tice, did I get it right this time?
You did.
How
Thank
about
you very
that?
much. I just wanted to reiterate, I absolutely agree. It is well within our scope that we address the issues that are crime and fraud that are related to cost drivers for insurance. And I can't imagine that that wouldn't be within our scope. So I absolutely support passing a model act in this arena.
Anyone else on the committee want to make any additional comments? I will say I tend to agree with Representative Jordan, and I just want to thank the committee for making me feel at home, because I thought if we took a vote on this that I'd probably lose, just like I do at home all the time. So it seems like the general consensus, aside from higher thinking individuals like myself and Representative Jordan, is that we should move forward with the model. So I'll make that decision now, and we'll move on. But I really do appreciate everyone engaging civilly on this issue. And again, Mr. DeCampos, thank you for your input. So we will move on. That's been a really interesting conversation that I think we're all pretty excited to have behind us now. At least I am. So thank you all so much for that. Next on the agenda is a discussion on liability-related issues within the sharing economy, and I want a couple of folks from Airbnb to come up and join us at the table. With us here today, and I'm a guy who loves being on first name basis with folks because, frankly, I've known Wes Bissett for like 5 years now, and I consistently mispronounce his last name. I'm not even going to try with the two of you, but I would love for you to introduce yourselves, Byron and Padma of Airbnb, and we will have a short discussion about the sharing economy.
Thank you, and thank you to NCOIL for having us and for allowing us to speak about this important topic and for your hospitality over the last few days. As you mentioned, I'm Byron Wobeder, Associate General Counsel of Insurance at Airbnb. And
I'm Padma Purushothaman, leading product development at Airbnb.
And what we'd like to talk about is the proposed Online Marketplace Guarantee Model Act and our host damage protection. Padma's going to talk a little bit about Airbnb for those of you who are not familiar with our product and our platform. I'll talk a little bit about the program, how it works, and then we'll talk a little bit about why we support the proposed model law. And with that, we'll move on to Padma.
Great. Thank you, Byron. So Airbnb was born in 2007 when two designers decided to create this website called Air, Bed, and Breakfast and decided to host their apartment to conference attendees coming to a design conference in San Francisco. This is the first apartment that was listed on Airbnb to support paying the rent for the host, the very first host on the platform. What had its modest beginnings with that website and this listing has now grown to over 8 million hosts across the entire globe offering their homes on the Airbnb platform. Every day, these hosts welcome millions of guests to their homes and allow them to connect with the local community in a more authentic way. In the US alone, over the last year, in 2023, we've had almost 22 million guests who have booked on the platform and had 36 million reservations. Obviously, for a platform of this scale, to be able to manage and have these hosts and guests connect on a daily basis, trust is an important element of the platform. Host damage protection is one program that offers trust on the platform. So in 2011, 3 years into the Airbnb history, there was a famous or an infamous incident called the EJ incident that became viral on the newspapers. This host had listed their home on Airbnb, and the home was trashed and burglarized by a guest who rented through the platform. Out of this incident was born the host damage protection program, which is a guarantee of about $50,000 for any damage that was caused by a guest who rented through the platform to any of the belongings of the host's home. This has now grown over the years, and it's continued to protect the consumers and the communities since 2011. So in addition to host damage protection, there are many other programs that Airbnb offers to connect hosts and guests to promote trust, transparency, and authenticity. We do ID verification for guests, location verification of the homes. You use intelligence to detect and prevent parties. And as a combination of all of these, we are able to continue to promote these listings and enable hosts and guests to continue to connect with each other. And for guests, there is a unique and differentiated need. For certain reservations, they may want more privacy or a different set of locations or an extended set of amenities that the hotel might not offer. And so for these set of hosts, these set of guests and their reservations, Airbnb provides a unique value proposition, which is something that we've highlighted in our latest ad campaign.
Which may not work.
One more?
And so that's what brings us here today. As Padma mentioned, this program is very important to us. But I kind of want to give you all an idea of what is our host damage protection, and then we'll talk a little bit about how it works. Our host damage protection is a limited incidental guarantee offered by Airbnb to its hosts as part of its terms of service. It guarantees the guest's obligation to pay those property damage that they cause to the host during the Airbnb stay. It's, of course, part of our terms of service, and it's automatically included for every host. Now, I can tell you all of that, but let's talk about an example here. When a guest goes onto our website, finds a place to stay, in Hawaii or wherever it might be, they sign our terms of service. Within that terms of service, the guest agrees that they will pay for any damages they cause to the Airbnb listing and any damages to the belongings. They book the reservation. The host accepts it, and they go to the listing. On the host side, the host also agrees to the terms of service, and as part of that terms of service is the host damage protection guarantee. In the rare event that something happens, and it is incredibly rare that something does happen to belongings, the host and the guest can work on it together. So essentially how it works is, well, as an example, the guest rents an Airbnb, drops a lamp during their stay. The host comes in after the stay to kind of check out the place. They realize, oh shoot, there's a lamp here that's been broken. They'll take a photo of the lamp. They'll take the photos of the lamp, the price of the lamp. They'll put it on our platform. It's called our Resolution Center. That will go directly to the guest. And at that point, the host and guest can kind of work it out. And in many cases, the host and guests actually work it out, and the guest can pay the host directly for that damage. It's only when the guest does not pay or doesn't respond that we can get involved. And what we will do is look at it and determine, was the guest responsible, yes or no? And if they were, we would pay it under our terms. After we pay it under the damage protection guarantee, we would then have the ability to collect from the guest. And we do that via various tools on the platform. And we provide the appropriate notice to the guest, the appropriate documentation and evidence so that we can collect. And so that's our host damage protection generally. Why we support this proposed online marketplace guarantee model law? Well, first and foremost, consumer protection. As Padma mentioned, we are a community built on trust, on protecting our consumers, our hosts, and our guests. It's, the one big piece is transparency. In the model law, it's required that there are clear terms and disclosures on the guarantees that are out there that are provided by online marketplaces. Second, financial solvency. This ensures that the damages are paid. There's a requirement in there to either carry a contractual liability insurance policy or have the appropriate market capitalization or net worth so that damages can be paid and will be paid by these online marketplaces. State registration and fees, this gives the notice to regulators so that if there are issues, they can go ahead and speak to the right people who, or the right online marketplace that's offering the guarantee. Enforcement, it allows regulators to enforce the provisions and ensure that the consumer protections are in place and are being adhered to by the online marketplaces. And then finally, flexibility. It extends to many users of online marketplaces, both hosts and guests, as well as other marketplaces out there beyond the rental of homes marketplaces. And then finally, we think clarity is needed. We have had some questions from regulators, and so we are strongly in support of getting the clarity here so that we can continue to offer the online marketplace guarantee. And with that, we will take questions.
Thank you so much, Byron. And we're going to hear from Matt from NAMIC for a few minutes before we open this up to comments and questions.
Thank you very much, Mr. Chairman. Matt Overturf on behalf of the National Association of Mutual Insurance Companies. I will be very brief. While we're still reviewing the language that has been circulated on this topic, we do want to raise an initial concern of allowing a product that provides risk transfer like insurance under a different name to be exempt from the existing regulatory environment that all other insurance products are subject to. We look forward to learning more on this topic and continued engagement with both Airbnb and this committee in the coming months. And with that, I will conclude my comments.
Thank you. Really appreciated that, genuinely. We have a couple of folks who want to make. We have Representative Kiker first, and then we'll get to Representative Lehman.
Thank you, Mr. Chairman. So we've, from Illinois, we've seen some of this happen in the vehicle sharing economy. And I think one of my frustrations with the sharing economy is it all comes down to semantics, and it seems like there's been a lot of exploited and unintended loopholes that many communities have suffered. And it's changed neighborhoods, often displacing those that are systemically poor, like renters and that type of thing. And I see this as potentially another loophole that sharing type organizations are trying to exploit, because what we're really talking about here is we're talking about an insurance risk that we're not going to call it insurance. We're just going to let it slide through. I think that's a very slippery slope for any legislator to continue. And I urge caution, because we are talking about a transfer of risk, and that by definition is insurance. So we need to be very, very careful in this space. because we've seen so much manipulation of these loopholes by similar organizations.
Thank you, Representative Kiker. Representative Lehman?
Thank you, Mr. Chairman. The question I guess I have kind of goes to what Namik brought up, and that is the whole fact that insurance is such a heavily regulated industry. So if I'm selling this product, right now to sell an insurance product, you have to be licensed. The carrier has to be approved by the state and file your rates and everything else. My general question though is where is there a lack of coverage now? Because I remember when we did the whole sharing economy with Uber and that 7, 8 years ago, I brought back the same issue with Airbnb, and the industry said we really don't need anything on the Airbnb front because we already pay for all this. Because either one, everybody has guests in their home throughout the year who break something, who damage something, and either the homeowner policy covers that, or I can go against their homeowner policy, which covers for property damage. I think if you have a situation where there's damage and no one seems to know who, where, I don't know if that's an insurance issue. Because at the end of the day, somebody, even if I file that claim under my homeowner policy or my commercial, so for clear disclosure, my daughter has an Airbnb here in Nashville, Parton Airbnb, by the way, if you want to check it out. Pardon me. But in the course of that, she bought commercial insurance because she doesn't live there. So that commercial policy is going to pay for if there's damage to the property by that tenant, and if they subrogate then against the tenant's homeowner policy, that's all in place now. So I'm not sure what gap we're missing when it comes to claims, other than it looks to me like it's a way, hey, I can add to the cost of an Airbnb. Why not offer this extra, like a life and health on an auto loan? But even then, you're still regulated by the state. And so I think, as I think Namik said, we can continue to look at this, but I think the real thing for me is going to be how are you going to be regulated, and really what's the necessity of the product if it's already being covered elsewhere?
I think one thing is, we don't have any deductible at all, and so there's no, threshold here. And these are, for the most part, these are household items. They're towels, they're small items. Our average item that we'll pay is a few $100s. So many homeowners have deductibles that these wouldn't apply to. And then secondly, it is a different situation when you're, as a homeowner's carrier, you generally have a primary obligation as a carrier to pay these out. This is a situation where the guest is paying a lot of these first, and it's just backstopping that guest's obligation.
Yep. I just want to add that sometimes when we talk to hosts, they've also expressed that they ultimately want the guest to take responsibility. And I think with this platform, with this marketplace, they want to make sure that there is this dialogue, the conversation that happens. And ultimately, they even want us to follow up with them to let them know what eventually happened, even if we ended up paying the host, for them to go on and continue in a timely manner. Did we end up collecting with the guests? Or if they continued such sort of damages or offenses, are they still on the platform, or are we taking actions against them?
Thank you. To commitment. Oh, we have one more comment. I cannot see if you'll introduce yourself. Oh, Representative Mayfield.
Thank you, Mr. Chair. First of all, I don't want to broaden the scope of this conversation because the agenda says liability issues, but this sounds like it's just property damage issues. Is that correct?
That's correct, yep.
Okay, so I won't ask the other question, but I always caution as a legislator, it sounds like this is already part of the contract between Airbnb and the consumer and the homeowner. I always caution as legislators that we don't start inserting ourselves in private contracts, and that was just my comment.
Thank you. I tend to agree unless I don't. Representative McFall.
Thank you, Chair. I have a question. Why isn't it that you don't just offer like an additional product yourself to cover that either the Airbnb host could purchase, much like when you buy an airline ticket, you can get coverage in case of emergencies and you have to cancel your ticket and it covers it. How come you can't just offer something that could be an additional revenue stream for you, actually, instead of having us get involved?
Yeah, I think we've thought about it. The thing with offering products for purchase is there may be only few hosts or few guests purchasing it. In how do we manage to handle damages and ensure that the host can continue to host for other guests and continue to use the platform if they don't purchase it?
Right, but you could offer it to the hosts. That way it's an additional coverage for them. That way everything. Or charge more, or there's an additional fee for the person renting or whatever it is and you get a discount. I don't know, just something else instead of having us get involved.
I think we kind of taken always this as more of a obligation of the contract between the host and guest to be responsible. And we do see 99.9% of the time, there are no incidents, and these incidents are so rare. And so for these kind of incidents that happen so rarely, we don't want to impose the burden on majority of the hosts and guests to have to go to pay more to kind of have to purchase additional policy and maintain them to manage such small risks on the platform.
Thank you all, committee members, for your questions. And I just wanted to add a couple. We spoke earlier in this meeting about this, and in my interpretation is that you're seeking from us model legislation that will provide clarity. You're not asking us to insert ourselves in the process. And you know, as an insurance guy, I echo Representative Kiker's concerns. I do know that Airbnb, you know, and the short-term rentals can have an effect in neighborhoods. I do think that issue is over here, and the issue of the individual host and their property is over here. And I think that there are two legitimate conversations to have, but not necessarily the same. And in my view, and I would hope that you can tell me if how wrong I am on this, the idea is Airbnb does require the hosts to carry insurance coverage. That is already in place. The idea here is, you know, not so much when a window breaks and you need to file a claim on that, but when an item in the place is destroyed or damaged, you want to be able to have an avenue by which the host is made whole that does not require them to file a claim. And again, the issue of, you know, one individual operating dozens of Airbnbs and kind of taking advantage of the platform in the process, that's a conversation we should have, and I don't want to put you all on blast about that today, but over here on this side, I'm imagining a mom and pop situation where they've got, you know, like Representative Lehman's daughter, a property, and they just want to be able to be made whole without filing a claim, without having that effect on their coverage. Am I right in understanding that this is what you are seeking, that this is just clarifying language, not that you're asking us to step in and create a new product or anything like that?
That's correct.
Great. I love being told I'm right. Well, I appreciate this conversation, and I know that we'll be continuing to have that conversation. And then I also want to add, we had a conversation about this the other night, and then here's what I do ahead of INCOIL meetings. I see what time it is, and for months I think about, you know, reserving my room, and then I do about a week ahead of time and realize that I have missed the opportunity to get a room. So here in Nashville, I rented an Airbnb, and I was ironing a shirt, which is a new thing that I'm trying to do. And the iron ruined my shirt collar because there was like some residue on the bottom. So the next morning I saw the two of you and I said, hey, I appreciate the conversation we had yesterday about making sure that the host is made whole. Would you be open to making this language such that it goes both ways? That if you are, you know, when you lose your phone in an Uber, there is a way for you to get that back. How do we make sure that those who are staying in a hosted place are able to be made whole if something happens to their stuff, if they're damaged? You all were eager to say, yes, we'd love for this to be able to go both ways. So I wanted to make sure everyone on the committee and in the room knew where you all are on this and how open you are to making sure that this is a pro-consumer model both ways. So thank you so much for this, and I'm sure we'll be engaging you in further conversations throughout the year. And again, thank you, Dynamic, for your brief comments as well. We will move on now to any other business, which is everyone's favorite. Is there any other business? Representative LeBeau.
While Representative LaBeouf is getting the microphone, it's clear, so the name of this model is going to be changed to the Forest's new shirt bill?
Yeah, I think that's a strong, we'll workshop it, I'm going to go to the Parthenon later for some inspiration, and we'll see what we can come up with. Representative LaBeouf.
Great, thank you, Mr. Chairman. So I'm hoping that this committee can consider in the future a larger dialogue around the use of aerial photography in homeowners insurance assessments. I know in my state, we've had some issues where there either isn't a clear appeal process if the insurance company misidentifies something on a roof. There were some major news stories where there were some solar panels on a roof and the aerial photography came over without the homeowner's knowledge, dropped the claim because they believed it was damage, because whatever algorithmic assessment didn't pick up what the material on the roof is. There's also been some non-renewals that have been issued after aerial photography, and so hoping we can have a larger dialogue on how that's affecting our states and how to make that work.
I appreciate you bringing that to our attention, and I look forward to having more conversations on that as well. Is there any other business before this committee? Thank goodness. I do have one quick piece of business. Representative President Oliverson has made it clear that he wants to make the affordability and availability of auto and homeowner insurance a priority, something that I really appreciate and would like to help with. But I wanted to make note of that because as a part of that effort, obviously, this is the Property and Casualty Committee, so we'll be having a standing item on this agenda, on this committee's agenda at our future meetings to provide updates from NAIC on their PNC data call and other related issues that the NAIC is working on this issue. So I just wanted to make sure that I made that announcement as the chair of this committee and make it known that I look forward to working with the President of INCOIL on this issue, as I know all legislators are dealing with constituents who don't understand how insurance rates are established, but think that there's something that we can do about it. I loved the conversation that we were having on the fortified roof model legislation, because while I think a lot of folks think that legislators can wave a magic wand and fix this for everyone, it really is a challenge, and we are obviously in an unprecedented hard market. So finding ways as this organization to bring relief to consumers, I think, should be a priority, so I really appreciate it. Anyway, I think we will be taking a quick break. I apologize for going over time. I take pride in making my meeting short, but with that, if there is no other business, I will adjourn this meeting. But in order to do that, I need a motion and a second. Moved, seconded, all in favor? All opposed?